Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video we are looking at 5 companies that I genuinely feel have been completely neglected. Not because they are terrible businesses, because Wall Street has washed their hands off these companies, and then when it comes down to retail investors, we don't know any better. We don't know when we say high quality businesses and we just sell them when Wall Street says sell it, and that's absolutely terrible. So I'm going to share with you guys five companies that are really cheap right now. 4 stars from Morningstar. As you know, Morningstar rating starts from, it goes up to 5. 5 is the basically most undervalued stocks. These companies we're talking about today, all of them have 4 stars, and I'll show you in a second. Now, what you see in front of you is my portfolio, and as you can see, Trading 212 has done quite a bit of updates. I really like it. If you use Trading 212, you probably have noticed as well. If you haven't, there's a link in the description, so go on, basically get yourself a free share. It's really getting better. Like right now, we've got the rate of return, we've got the total return that we invested in terms of money wise, we got how much we basically deposited and so on. And I like this part here, okay, where it shows you the entire portfolio, and then it shows basically how much we are up or down. So 21% or £21,440. Now that is unrealized gains. So if I was to sell the entire portfolio right now, I would have made £21,440 in profit, as well as of course what I've already made, which is basically I've shared that with you guys. And I will be doing a portfolio update anyway, so when I do the portfolio update, I will share that with you guys as well, as always. So yeah, so this is my portfolio as you can see here. So what we're going to do now is just talk about these 5 companies. I'll give you brief information about each one of the companies. I don't want to make the video any longer than it needs to be, so let's get started. But before we do that, as always, if you can join us on the Patreon account, for £5 or $5 a month, okay, you get access to the family portfolio. You get access to all the buys and sells I make before I release it here. You get access to the Discord, which I genuinely think is probably the most important part here, where you get community of brothers who are genuinely sharing very good practices on daily basis and talking about things that are important in the stock market. You also have the watch listers, you've got the dividend trackers, you've got the Sharia compliant investing ebook. So if you're new to investing in the stock market, you know, this is probably a good place to start with. And of course, if you can afford that, if you can't afford it, absolutely fine. Just make sure you like the video, subscribe, and of course let your family and friends know about this. Inshallah, we're trying to grow at this community to become, inshallah, one of the best out there when it comes to Sharia compliant. We're learning it together. I'm learning everything, basically every single day, from you guys as much. I hope you're learning something from me as well. So let's put this together, inshallah. Let's help, inshallah. Assalamu Alaikum. Let's now do the rest of the video. Let's talk about these companies. Right, and as always, we're looking for the same more or less information. We're looking for the motive of the company, the market cap, so to see how big it is. We're looking for any dividends that company pays. We want to make sure that they're growing that dividend. We want to see if it's safe. We want to see the margin of safety, which is important. We want to see, so return on equity, return on investor capital. All of these will help us to see if the company is actually profitable, if the management are doing a good job with the money they get in from us. We want to see if it has a free cash flow, which basically they can use that money to buy back their own shares, to pay us dividends, to pay off any debt, to acquire other businesses, to grow their business basically. Okay, there's a lot they can do with that. And we want to see if the basically earnings are expected to grow, because once the earnings are expected to grow and the revenue are expected to grow, of course then the business is a profitable business in the long run. As long as they can reduce their cost and basically revenue is growing and sales are booming and everything else, then we won't have anything else to worry about. And then the Morningstar, we're going to use the actual stars from now on. I think it'll probably be easier. Let me know what you think. The Morningstar valuation, so I'm going to use how many stars. So 5 stars is the basically most cheapest, 4 stars is basically still undervalued, 3 stars is very valued, 2 stars and 1 star is basically is still expensive, and then fair value price. So the price is the most important part. Then of course, and then you've got the stars to kind of help you. Okay, Right, let's get started and look at the first one, and that is Adobe. Adobe is probably one of the companies I genuinely feel has been neglected because people think AI is going to change this business completely and ruin it, and everyone is gonna basically lose their money. Right now, it has a market cap of $189 billion. I can tell you, we use Adobe in my company all the time, and trust me, we are still relying on this company. Current price is $433 per share. It hasn't paid any dividends yet, and the key point in here is yet, the keyword. The reason I said that is because look at Meta, look or Facebook, whatever you want to call it. Look Salesforce, look Google, for example. All of these have started paying dividends because they hit that maturity level, and this company is at that point. I think they potentially will be starting paying dividends at some point. Profit margin is absolutely amazing, 25%, return on equity 36%, and return on invested capital at 39%. Now, you cannot find basically many companies out there very basically that has similar sort of a metrics here. Free cash flow $7.8 billion. EPS is expected to grow by 11% next year. Revenue is expected 9%. 4 stars right now, $590 per share is where they think the price should be. Now, I do own it, so don't go buy basically the stock right now. I do own it in the family portfolio, but again, it's probably one of the cheapest out there right now. For 1 year, it's down almost to 30%. For the year to date, it's about 3% down. For the last 6 months, about 15% down. Check this out. Current forward PE for this company is 21, and when you look at the valuations, okay, the 5-year average for the PE, non-GAAP PE, for example, is 35. Okay, when you look gap 44, which is absolutely crazy. Now again, I understand there are some concerns out there, but in the end of the day, if you're willing to be patient, I think this is a great company. As you can see here, November 2025, when the company reports the end of the year, you're basically expecting about 11%, and then November 2026, they're expecting about 12%, 13% growth when it comes to and EPS. Revenue side of it about 10%, about another 10%, another 10%. So nothing absolutely to worry about. It seems very cheap right now. If we look at the financials very quickly, you will see this company. This is one of the reasons I like this business. Okay, total revenue in the last basically 10 years, $4.7 billion to right now $21.5 billion. And check out how much the cost of that revenue is, from $744 million to right now $2.3 billion. Okay, so it's slightly growing, but however, guess what? $19 billion of gross profit, which is absolutely ridiculous. That's why the gross profit margin for this company is absolutely amazing, and net income of $5.5 billion of basically net income, which is really good. A lot of that is going into that free cash flow, and then EPS grow from $1 to now $12. So you can't tell me this is not a high quality business. And overall, I genuinely think into basically moving forward, the company is in a good position despite this AI madness. Okay, they do have also their part when it comes to generative AI. They also doing the same thing. Okay, now is this one advanced Macro Devices, or AMD, has a market cap of 174 billion. The two reasons why the company is down a lot. First one is because of what's happened DeepSeek. When that news came out, a lot of companies went down. This was one of them. And when they reported recently, basically it wasn't the base what the analysts were expecting. But I genuinely don't think this is a bad company at all. Is in the right market and so on. And I think I might do a whole video, inshallah. I'll see how it goes. Let me know if you want me to do a whole video, maybe this week. Okay. As you can see here, it doesn't pay any dividends right now, but profit margin, return equity, return invested capital is barely there. It's just the company is being profitable now and is actually getting better in terms of the margins improving and so on. In terms of free cash flow, $2.4 billion expected to grow. Earnings are expected to grow about 43% this year and 24% when it comes to revenue. 4 stars right now, $160 per share. Right now is $107. And if we look at it here for the 1 year, basically it's down 37%. A year to date about 11%, last 6 months about 16%, and so on. If we look at the earnings expectation is moving forward for this company, so if we go to estimates, you will see this is basically the December of this year they expected to grow about 43%. Find another company out there that's expected to grow this much and down this much. It's ridiculous. Okay, December 2026 they expected about 33%, and then 20%, 29%, almost 30%, 11% late. Okay, same more or less revenue, 23%, 21%, 15%, almost 15%, and so on, 8%, 9%. It's ridiculous. Absolutely amazing company, genuinely, in my opinion. And then when it comes to Wall Street, they expecting. In fact, I'm going to show you the other one as well. I don't think I showed you this, but strong buys, we got 27 strong buys. We got 7 buys, 15 holds, and 1 strong sell. And they're expecting the price to be about $150 per share, which is about 38%, 39% upside from where we currently are. And in terms, just to quickly looking at revenue side of things, again, growing revenue every single year for this year after year, 25%, $25.7 billion, and about $12 billion of that is the cost of that revenue, $13 billion in terms of gross profit. They do spend a lot of money on basically research and development, rightly so, because you can't expect this company to do that. And the net income is about $1.6 billion. And in terms of EPS, it has actually came from, this is what I mean, the company has been, of course, and basically not making profit for quite some time, and then it started to make, and basically because of 2020 everything was booming, a lot of technologies, people were buying technologies, that's why the revenue went up, and then it kind of went back to where it was and before COVID, and then of course now it's slightly improving. So we will see where it ends up, but that's basically it. Just to go back to Adobe before I forget, we just need to look at the analyst. So we got 18 strong buys, 9 buys, 10 holds, 1 sell and 1 strong sell, and about 32% upside from where we are. $573 per share is where they think the price should be. The next company we are looking at today is ASML. ASML, I've talked about this company. I can't say enough about this company. Probably one of the best companies out there, and I think it will be around for a very long time. 286 billion market cap, wide moat, right, currently trading $727 per share. $880 per share is where they think the price should be. Excellent free cash flow. All margins are absolutely amazing. They have been paying dividends for a few years, which is good. They expected the earnings to grow about 24%, EPS about 14% next year. And as you can see here, 21% down for the year, and then year to date about 5% up, 29 basically when it comes to forward PE. If we look at the earnings expectations moving forward, okay, you can see that 24%, 20%, 20%, 13%, 14%, whatever, 16%, 14, 12%, 10%, 14%. So absolutely nothing to worry about when it comes to that. If we look at the financials again, you can see $29 billion, 14 of basically is that cost of the revenue, $15 billion when it comes to gross profit, which is absolutely fine. Their net income, again, is another company that spends a lot of money on their research and development, rightly so. Okay, and then we have the net income, $7.8 billion, which is really good, and growing basically EPS when it comes from $4 to right now to about $20, which is absolutely amazing. Now, just to show you ratings from Wall Street, we got 21 strong buys, 8 buys, 9 holds, and 1 strong sell, and $920 per share is where they think the price should be. $26 and 26% upside from where we are, which is absolutely fine. The next one that we're looking at today is Merck, another one that has basically gone down when basically overall market, basically when they reported recently. This is probably one of the best pharmaceutical companies out there, and I'll show you in a second and the reason why. In terms of dividends, it's a huge company, by the way, and it has a wide moat. In terms of dividend, absolutely fine, really good. Safety 90%, and look at these metrics again. Profit margin 26%, 28%, 28% when it comes to return on invested capital. Almost a $15 billion of free cash flow. EPS is expected to grow about 18%. Revenue about 3%. 4 stars right now. $120 per share is where they think the price should be. And when you look at it for the 1 year, 31% when it comes to the down 31%. And if we just look at the 1 month, you'll see about 15% basically down just for this. I think it was just last week, about 11% or so down when they reported. For the last 6 months, about 22%, less than 10 when it comes to current PE. If we look at the financials very quickly, you'll see this company has a massive, basically growing revenue. They spending about $12 billion of that, taking home gross profit of $51 billion. That's why the gross profit is high for this company. They do spend a lot on research and development because, of course, the drug companies and so on. And about $17.1 billion of that is the net income right now. EPS is heading the right direction from $1.58 to right now $6.74. Okay. Now, going to earnings expectations. Okay, you will see basically this 17%, 18% for basically for 2024, 2025, 2026 about 10%, again 9%. So if we just focus the first three, even on this one 2028, I think that's when the patent of Keytruda wears off, and from there might be a bit of a decline, of course. So for the next 3 years you've got nothing to worry about. That this company has a pipeline that is actually growing. So despite Keytruda, basically they're losing the patent for Keytruda, and when that happens, that's their biggest drag. They still will be able to sell the space, but there are other competitors that will enter the market, and that could potentially hurt the revenue. So we will see what happens with that. But overall 2.6% when it comes to 2025. What did I just say here? 3%. There we go. Okay, so that 3% comes from here. It's about 2.6, 6.6, and 4.5. So again, nothing to worry about in terms of that side of things. And when we look at the ratings for this company, as you can see here, we've got 14 strong buys, 5 buys, 8 holds. Let me know if you wanted me to do a whole video on this. $118 per share, 36% upside from where we are. By the way, if you haven't liked the video already, please do so. It helps with your channel. And join us on the Patreon account, inshallah. Next one is AstraZeneca, another company that has been basically neglected because of the situation with the CEO and some of the basically people that run the business in China, and that has not changed my opinion at all. By the way, with this one, I bought more when that happened, by the way. Okay, I bought more of this company. I will share that with you guys, inshallah, when I do the actually I think I have already shared that with the community and so on. So when it comes to this one, 223 billion market cap, wide mode, and dividend. Basically, I'm using dividend information from Dividend Safety, Safe. What is it called again? Simply Safe Dividend. So, but they don't have, for UK companies, they're not very accurate at all. But when you look at the profit margin, return on equity, return on invested capital, nothing to worry about. $6.7 billion of free cash flow, which is really nice. Earnings are expected to grow about 11%, revenue about 5%, 40 stars right now, $78 per share is where they think the price should be. And looking at Seeking Alpha, as you can see, for 1 year is about 8% up. For the year to date is about 10%. The last 6 months about almost 11%. Right now it has a forward PE about 15 right now. If we look at the financials very quickly, you can see $24 billion to right now $54 billion. They taken home gross profit of almost $44 billion. Again, they're spending a lot on research and development, as you can imagine. And then the net income about $7 billion. EPS is heading the right direction. Is growing $2 to right now $4.50. And the company has actually said, basically for the next few years, probably we're one of their best years moving forward, if you like. So Wall Street is actually saying 6 buys, strong buys, 4 buys, and 1 hold, no sales whatsoever. And as you can see here, $85 per share is where they think price should be. About 19% upside from where we are, which is absolutely fine for me. Again, another really solid business. Okay, all of these companies are really great companies. Majority of them have the white mode, despite the current. If you are a long-term investor like myself, you wouldn't worry about what's happening in current news, and you're gonna buy and hold these companies. I do own all 5 of these companies, and this one is basically these 2, of course, are in the family portfolio. The rest of them are here in this portfolio that I always share with you guys. And as you can see here, from Sharia compliance side of things, there's nothing to worry about. If you like this type of content, don't forget to join us in the Patreon account. If you have not got a account for Trading 212 and you live in European countries, you could potentially get this. And it's a platform where basically your buys and sells basically do not cost you anything. So yeah, try it out. Let me know what you think. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.